Welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I'm sharing my Tesla stock price prediction for the end of 2022, heading into 2023. Full disclosure, Tesla is not an individual stock that I own. However, I have a decent chunk of money in the QQQ and various forms of that. So I do have exposure to Tesla in my portfolio. Now, if you're a regular viewer of the channel, you know that I don't really talk about Tesla stock that much, certainly compared to what some of the other stock market channels do. And some of that is because it is a very difficult stock to predict in terms of fundamental valuations, which is mostly what I do here. And the other reason I don't go deep on Tesla very often is because every time they have the smallest headline, it's pretty much covered ad nauseum across YouTube. So for me, I like to offer some differentiation with my content and try to look at some stocks that not as many people are talking about. But here today, I am going to make a price prediction. We're going to talk about quickly why it is hard to make predictions on Tesla stock. And then I'll jump in, run some comparables, and we'll come up with the final number. Okay, let's kick things off in Seeking Alpha. Take a look at Tesla stock today here on April 7th of 2022. Got a price at $10.25. That's down almost 2% today here on April 7th. The market in general has been on a downturn over the past few days. Speculation is raised about interest rates and Fed action. We still have the Ukrainian war going on at this point. So keep that in mind if you watch this video as it comes near its maturity here in December. These are the things we're dealing with that actually add to some of the challenge of pricing a stock like Tesla in the future. Now, for the stock projections I do on this channel, it's a very, very simple formula that anybody can do at home. We are looking ahead to EPS projections, and then the harder part is trying to feel out what the valuation multiple will be in the future. And that, of course, would be your PE ratio. So I only focus on stocks that are profitable companies with an EPS. It's really core to make this simple formula work. And we see here today with Tesla, you have an EPS looking ahead of $10.72. And the forward PE as it stands today, and Seeking Alpha actually does run this update as the price changes, we're sitting at 97.58. Now, switching over here, I made a quick stock comparison in Seeking Alpha that includes Tesla, Ford, GM, Toyota, and NVIDIA. And the reason I threw in NVIDIA here is because we will see, and most of you probably know, that Tesla's valuation multiple is far and away above anything you'll see in a traditional automobile manufacturer. Now, there are plenty of people who will argue on both sides on whether or not Tesla should have a much higher multiple than those other traditional companies. And that's not really the focus of this video. Really, the key here is trying to project whether or not they will maintain that high multiple going forward. Quick pause here before we jump into this comparison. If you're interested in learning more about Seeking Alpha Premium, some of the tools that you see here on the screen today, my affiliate link is in the description and saves you 50% on a full year of Seeking Alpha Premium. Now, jumping into the comparison, the most important things for me going forward is revenue and earnings per share and valuation. So I'm going to skip all the way down here. You can see how much data Seeking Alpha does provide, but we're going to stop at this valuation screen, and let me get it centered up here. And we're going to look at some of the forward views for Tesla versus competitors. So if we just scroll down to GAAP PE looking forward, this table is not updated as frequently as the home page of the stocks that we're looking at. So you see we have a 117 here. I think it was like 97 on the regular Tesla stock screen. But 117, Ford's coming in under 10, GM's well under 10, Toyota is right at 10, and then NVIDIA is at 54. So our two outliers get these much higher valuations, and the rationale for higher valuations 9 times out of 10 across the stock market is growth. the more that you grow, whether it's the top line or the bottom line, or ideally both, the pace of your growth in future years does a lot for your valuation multiple. So if you think about a PE ratio, it's rooted in earnings. The denominator is the earnings. So when we were looking at Tesla, it had like 1072 on the EPS line or the earnings line. If that 1072 can grow quickly, then the PE comes down much faster in the out years. So not a huge surprise that this is higher than the folks that we see in the middle, the traditional automakers. But the catch is, and what we have to just simply guesstimate about the future, is how long does Tesla deserve a 10x, say, on the competition? And the only real way that we can answer that is to compare growth rates to these companies. So let's go down here to the growth column. You've got Tesla on the top line, revenue growth projected for the next 12 months or so, plus 50%. Ford is 10%. GM, about the same. Toyota, surprisingly, is coming in at plus 32%. And NVIDIA, just for the sake of a high growth stock to compare to, is coming in at 34%. So here we have Tesla far and away the leader by multiple percentage points, and the closest traditional automaker is Toyota at 32%. Now let's go down to the bottom line. What does the EPS growth look like in the near forward term? And again, this is our denominator, right, in a PE ratio. Well, Tesla's is growing 83%, at least the projection right now. Ford's not doing too bad at 76%. GM, though, and Toyota, they're still in double digits, which actually is pretty good for a traditional stock. And then NVIDIA at 40%. What's interesting to me, if these numbers hit, is that Ford is really not too far off, at least for the forward year on EPS growth. So they're hanging in there with profitability growth on the bottom line this year, but the top line, they're certainly not selling as much. Now, just thinking about this for the short term on these 1 year numbers, I would say, revenue growth alone, Tesla deserves a higher multiple than Ford, right? If their EPS growth is about the same, then I would say that Tesla's revenue growth is more promising. So yes, I would pay more for Tesla than Ford. The catch to the whole thing is how much more would you pay? You are paying 10 or 11 times the PE multiple on Tesla over Ford. So that's more or less an opinion for investors, right? Not the 10x or the 11x, but is Tesla worth that? That's an opinion. And right now, anyway, from what we've seen over the past 3 years, is many investors are happy to buy the stock at that level and pay for that premium. We'll just have to see how long it lasts. Now, sidebar here, which is just an interesting question. NVIDIA has a similar level of popularity from investors where they have a premium over all the other chip stocks. So, side quiz for you. Would you pay more for Tesla 97 times, and I guess that's the non-GAAP number, 97 times non-GAAP earnings, or would you pay NVIDIA 43 times that same number? So again, each individual investor would have a different take on that and a different level or tolerance level for risk. But it is something to think about. Basically your multiple for NVIDIA is half of what you would pay for Tesla, at least on the non-GAAP PE view. All right, next piece of the puzzle for me is really trying to hone in on earnings in the future so that we can have that correct denominator when we go through this. So again, seeking alpha, we're going to go down here. And this year, December of 2022, the EPS estimate, like we saw on the stock homepage, is 1072. That's your 97 forward PE. Now, for my stuff, though, I'm talking about a price prediction at the end of the year, right? So 2022 will all but be in the books. And honestly, Tesla shares a lot of details about how their sales are going. So we'll have a pretty good idea whether they hit or miss this certainly into December. I want to look at the next fiscal year, which ends on December of 2023. And at least right now, analyst number is $13.80 for next fiscal year. That's a 28% increase in their EPS projected for next year. So amazing growth to the bottom line. I mean, certainly this year, if they get into the 60%. And then if you talk about next year, slowing down, roughly half of the growth rate that we're going to see in 2022 if the numbers hit. However, plus 28% on the bottom line is not something that's very easy to find in a stock. Now, for my price target, we're basically going to wake up in December of 2022 and try to project what the stock price will be. So we won't be using a 2-year forward PE. We'll be using one that's more rooted in the current time. All right, now let's take an eyeball look at revenue. And the goal here, of course, is just to make sure, particularly with a high valuation stock, that they will continue to perform from a revenue standpoint. And 2022 looks good, top and bottom line, both plus 50%. I'm more concerned, though, of 2023. Make sure we don't have any clouds hanging over forecast for a year out. And at least right now, you got 32 analysts coming in at 28% revenue growth for next year. Now, if you put that on a price to sales number looking ahead, it puts you right about 10. 10 is not a terrible number, but getting under 10 or under double digits somewhere in the next couple years, I think is going to be important for this stock, at least from a value perspective. All right, so what is my price projection? And I always try to put these little spreadsheets together so you can see it. That way, if you want to go back and laugh at me or congratulate me at the end of time, you got all the information you need right here. So the stock is Tesla. Today's April 7th. Current price $10.33. Current forward PE of 98. I rounded that up from the 97 point some odd. And our current forward EPS is $10.72. Now, I'm talking about the end of 2022, so we'll be looking ahead to 2023 numbers. I have a target price of $1,190. I actually lowered the forward PE ever so slightly. This would still be in that 10x, 9x neighborhood of forward, but I think with the economic situation that we might be facing, I think that valuations come down, not only for Tesla, but also for other people. And so I took it from 98 down to 85. The company is also maturing. So typically you see as companies mature, their valuation multiple goes down and there's more focus on profitability. Now, on the EPS side, I went with 14. You might remember that the projection today is 1380. Tesla has a pretty good track record of outperforming. So I did boost that by 20 cents or so. The bottom line is about a 15% gain from where I sit today. That's my projection for Tesla heading into the start of 2023, $1,190. And I will say too, if you're a Tesla fan and you think that's a lowball number, all of your efforts or all of the things that you need to happen are going to reside right here on that valuation multiple. I went down. That might have been a poor decision. Can they keep carrying 100 on the forward PE line? Tough to say. I just feel like this environment, certainly where I sit here in April, the environment for stocks and valuations are on the negative side. And I expect that we'll be reeling in some of the higher multiples that we see out on the market. All right, guys, so I'm coming in at $1,190 for Tesla stock heading into the last days of 2022, maybe the first few days of 2023. Whenever we start to really focus on 2023 fiscal year numbers, that's when this one's going to flip over to more or less match my projections, at least on the back end fundamentals. The thing we can't control, of course, is the valuation multiple. How much will investors continue to pay for the profits that Tesla's been building up? All right, let me know what your price projection for Tesla stock is in the comments. As always, please give the video a like, share with your friends. Before you leave, don't forget to check out that special offer for Seeking Alpha Premium that's down there in the description. Thanks to everybody for your support. We will see you on the next video.